learn on the go, and stay informed. Our goal is to keep the average user informed and up to date with relevant tax information. For the entrepreneur and investor, getting acquainted with tax laws and regulations could be quite daunting. Well, not anymore. Introducing the KPMG Tax mobile app, where you can access all tax-related news, laws, and insights in one place. Also, calculating personal income taxes has never been quicker. To get the app, simply search for KPMG Nigeria Tax on Google Play Store or iOS Store and install. Once installed, quickly do a one-time sign-up on the application to access a constantly updated library of news, laws, and articles alongside easy-to-use tools. The KPMG Tax mobile app has a minimalist design, making it effortless to use and navigate. What's more, if you can't find what you need, asking a professional is as fast as it gets. Let's walk you through the application. The full menu is accessible from the left and helps you jump to any part of the application in seconds. Access fresh tax news by clicking on the news icon. The seamless scroll makes it simple to view all news at a glance. You have news you've already seen and want to go back to? Just search. Expand or share each news item to your friends with the dedicated buttons. Adjust your news preference easily from the settings icon and tailor your content. We have embedded tax legislation and popular cases in our tax laws section. Are you eager to know more about taxation in Nigeria? KPMG Tax app has more than enough for you. Stay on the cutting edge of industry updates with insights features. The new app brings together alerts, newsletters, articles and publications from industry-leading KPMG professionals. You don't have to worry about missing important regulatory dates and other notable events. The notable date feature brings them all into one place in a calendar or list, however you want to view them. For the average employee, entrepreneur or business person, KPMG Tax app has another important feature, the PIT calculator. Plug and play, simple as it gets. Input the required numbers and calculate your taxes. Also, the app has jokes and valuable tips. Check in to learn something new and fun. Still feel there's more to know? We've got your back. Ask an expert and get quick, insightful responses from KPMG professionals when in doubt. Learn more from various authorities through recommended links in the external links tab. Read all about us to find out more about KPMG's service offerings, our responsible tax principles, and disclaimer. It's now a breeze to connect with us online. Just click on the link icon on the homepage to get to us on social media. KPMG Talks app, connecting with you on the go.
Okay, good morning, everyone. Good morning, our distinguished guests. You are welcome to the February edition of our tax chat, our social media tax chat. Today, as usual, we would have an interesting topic to discuss, and we hope that you would contribute to these discussions. The topic is the extended powers of the FIRS and its implication for tax administration at the federal and the state tax levels. These powers that the FIRS has been given, will it be something the taxpayers will look at and say, yes, we are happy about it, or it's something the taxpayers wouldn't necessarily admire? My name is Ikechukwu, and I am a senior manager with KPMG Tax. And with me here today is Chika Uzulumba. Chika is also a senior manager in the tax division and deals with clients majorly in the financial services industry. So I'll let Chika introduce herself better.
Yeah, good morning, everyone. You're welcome to the tax chats, and we're really happy to have you here.
Okay, thank you, Chika. So just, without wasting much time, because we have a lot to talk about today, we would go straight into a short polling session just to have a sense of the knowledge our guests have in this topic, and it would help shape the discussion that we would have in this regard. So please join us in the polling session. We want to see your contributions. We want to understand your thinking so that it should help us. Yes, it should help us come up with the way we talk about the solution. So on your screen, you'll be seeing a screen that shows a barcode. So you can either scan the barcode or click on the link there. That should help you get into the polling session. We've also put a link in the chat, just in case that makes you gives you a better access. Okay. How many people do we have in there now? Okay, so let's have the questions. It's not. Can you zoom in on the questions rather than the video? Okay, because on my end, the video is showing more. But nonetheless, the first question is, okay, I can see that. Do you think it's better for the federal government and federal taxes to be administered singularly by the FIRS? A significant percentage is saying yes. Okay, that's good. The no is quite small. It's coming up a bit. Okay, I think that should do it. We can go to the next question. So do you think granting the FIRS access to taxpayers' sensitive information and ERP is positive or negative? Positive, negative, neutral? Okay. A whole lot of people are thinking it's negative. We've had sessions where, you know, in my view, we've had people that I think are pro FIRS, but here it seems like everybody is thinking from a taxpayer's, or at least most people are thinking from a taxpayer's point of view. So over 70% negative. Okay, we have the positive coming up as well. Neutral is very small.
Yeah, and you know, Ike, I'm just thinking that, you know, since the majority are actually thinking is negative, and they have a lot of concerns, you know, about it. So possibly because of, you know, confidentiality and how the FIRS will manage such things. So, I mean, it's not, I'm not surprised.
Yeah. It's always a concern. It's always a concern. But, well, I think we will talk about it a bit more during the session. So the third question: do you think there is sufficient penalty in the Act to ensure FIRS takes custody of sensitive data as they are confidential, as very confidential? Okay. Okay, I think this is pretty straightforward. a significant number of people think it's no. The penalty stated there doesn't seem sufficient to, make FIRS do the right thing. Okay, so let's go to the next question. Okay, so do you think the amendment from the Finance Act is sufficient to eliminate the multiplicity of tax audits by multiple federal government agencies? Yes, no? Okay. So a whole lot of people think it's no.
Could that be that they don't think the wordings, the provisions are strong enough? Or
Yeah,
I'm just wondering.
That's the implication. People think the amendments wouldn't eliminate the multiplicity of tax audits. So I mean, I would like, to learn during this session what, our guests think would be the solution to eliminate multiplicity of tax audits in the environment. So let's look at the last question. So does the expansion of FIRS power help to reduce conflict between state authorities and FIRS? Do you think that would help? That's close. So it's divided. Some people think, it would help. Some people don't think in that direction. It's a close call from what I see on my end. Okay, that's fair enough. So we'll come back to some other set of questions, but for now, I think let's just jump into the meat of the discussion. Please, if you have any questions along the line, don't hesitate to put your questions in the chat box. We will pick it up and ask our speaker here today, Chika, and I'm sure she will be happy to give us the clarification we require. So without wasting much time, I think let's just get into this. The Finance Act introduced some changes to the taxing rights of FIRS, and can we expect more? Chika, what's this about? What do you plan for, to tell us about this today?
Okay, thanks, Ike. You see, tax administration in Nigeria, is vested in 3 tiers of government. You have taxes payable to the federal government, and these are administered by the FIRS. You have those payable to state governments, and they're administered by the State Board of Internal Revenue Services of the 36 states of the Federation. And the last tier of government is the local government. Now, the FIRS Establishment Act, was enacted in 2007, and the act charged FIRS with the powers, for assessment, collection, accounting for, and then also accounting for revenue that is accruable to the government of the Federation. And also it states there in the FIRS Establishment Act that it's also for related matters. But bear in mind that related matters were not clearly defined. It wasn't really spelled out. Now, in recent times, in the past few years, there's been a series of controversies, about the appropriate taxing authority regarding revenue collection for certain tax types. So some of the disputes have actually led to cases being filed in courts, okay, and a number of them have not yet been heard. But then the Finance Act 2021 amended some provisions in the FRS Establishment Act, and it particularly introduced a new section called Section 68 that replaces the old Section 68, and then certain significant provisions were contained in it, and there were about 6 of them. Okay, so the first one was that the FRS is the primary agency of the federal government of Nigeria that is responsible for the administration, the assessment, collection, accounting, and enforcement of taxes and levies that are due to the federal government of Nigeria or any of its agencies. And there's an exception, except where the Minister of Finance authorizes otherwise. Now, what are these taxes and levies? Okay, you'd see them under the approved list of collection. So you have the company income tax, and these are the levies that are under the jurisdiction of the FRS. So you have company income tax, you have education tax, you also have withholding taxes on companies or residents of Abuja, that's the Federal Capital Territory, or non-residents as well. Then it also includes VAT, petroleum profit tax, capital gains tax, stamp duties on corporate bodies and residents of the Federal Capital Territory. And there's NIDA levy. And then finally, there's personal income tax that is only for the armed forces, Nigerian police force, residents of Abuja, and also non-residents. So what this means is that these taxes go into the Federation account, in which FRS will be the agency overseeing them. Okay, and we know that these acts equally have, acts, or these taxes have acts that govern them. So technically, the FRS has legislative powers, to administer them. So the second provision that was stated in the new Section 68 is that the FRS Establishment Act will take precedence over any other taxes regarding the administration and the general, I would say, enforcement of taxes and levies due to the federal government, except where there is a court case. So where there are inconsistencies between the act, which FRS is meant to oversee, and the provisions in the FRS Establishment, is meant to oversee, then the provisions of the FRS Establishment Act will prevail to the extent of the inconsistency. So the only exception where the FRS Establishment Act will not have precedence over any other laws will be where there is a case, a court case, like it's for litigation. Then the third provision, because like I said, this Section 68 contained like 6 provisions. Okay, so the third provision stated it states that it has now become an offense, okay, for any person to carry out the function of enforcing taxes and levies that are due to the federal government of Nigeria, except where the Minister of Finance authorizes otherwise. And then it also has to be approved by the National Assembly. Now, the fourth one is that it provides a form of laxity, and it stated that for the purpose of enforcing compliance with the provisions of the relevant tax laws, the FRS may collaborate with relevant ministries and agencies or departments of the federal government, but that is in its discretion to do so. Then it further went on to state that the agency of the federal government that becomes aware, that's any agency at all of the federal government that becomes aware of any incidents requiring tax investigation, enforcement, and compliance, they have to refer it to the FRS for necessary action. And then FRS can or may collaborate with such agencies to carry out the required enforcement or compliance measures. And lastly, which is the 6th content in that provision or in that section, it says that there is a penalty for any defaulter of all these things I mentioned that would And the penalty is that it will entail an imprisonment of a maximum of 5 years or 10 million naira or both. So we can see, okay, from this new Section 68, that the Finance Act has carefully covered all grounds, in ensuring that the FRS is indeed the primary agency for revenue collection for federation taxes. There's no more ambiguity based on the Finance Act, and any contrary action would attract punitive measures. So in the course of our discussion, I know we will be looking at how, the FRS extended powers has affected, areas like federal taxes, resident companies, and even the automated tax administration of FRS.
Yeah, that was a long one. Yeah. So
yes,
yeah, but I think I like the fact that you touched on almost all the nitty-gritty in that provision. But we are aware that some agencies have kicked against this power that has been given to the FIRS. What are your, like customs? So what's your view? What's your view about that?
Okay. Yes, you're right, Ike. In fact, other agencies have kicked against it. In fact, shortly after the Finance Act 2021 was released, the Comptroller General of the Nigerian Customs Service, that's Hamid Ali, he actually complained that the Finance Act has incapacitated the Nigerian Customs Service and other revenue generating agencies apart from the FRS from collecting revenue. So this is because the amended section had made FRS the sole agency for collecting and enforcing taxes even due to agencies of the federal government. So it made the amendment so wide and open that the Nigerian Customs Service felt it had hindered their ability, to collect, its custom duties, and levies. And also, if you had taken note, the section that's the new Section 68 also said that the FRS Establishment Act would take precedence over any other laws, with regards to the administration of taxes and enforcement of taxes and levies due to the federal government. And then it also included a penalty. So if you look at the strict wordings, of this section, technically it would mean that even the Nigerian Customs Service don't have the legal mandate to collect taxes. And that was quite disturbing. But the chairman of the Finance Act Committee came out just immediately to say that that's not the intention of the law, yes, he said that the amended portion was actually not targeted for the Nigerian Customs Service in any way. And he agreed that they would need to actually make slight adjustments, to rectify that aspect. So it has now been agreed, and this happened at a forum. So it has been agreed now that the Nigerian Customs Service will continue to collect their customs duty, the way they have been doing before. And there's no disruption in the operational activities. So status quo is maintained. And in essence, the issue was resolved. So it's clear now that it doesn't really affect the Nigerian Customs Service.
Okay, thank you about that, Chika. One of our participants, asked a question that is similar to, what you just responded to, but I would still like to, talk about it. And, this North South Power, they had said that, all these provisions that seem to have been provided in the Finance Act seem not to have stopped EFCC from still sending letters to companies on suspicion of tax evasion. And, in your opinion, do you think EFCC has the right to carry out, such exercise? And what should the company do in this instance?
Well, with the provisions now that is clearly stated or has been clearly stated in the Finance Act, any agency of government should actually not come after taxpayers, in terms of auditing them or trying to enforce compliance. The sole agency, the primary agency to do that is now the FRS. So, in recent times, there's been so many squabbles, between certain government agencies, whether EFCC, there are other RAMFAC, there are a number of them, So if EFCC is now coming up with this Finance Act, I believe that to a great extent, with the provisions stated there, even you should also remember that there are even punitive measures for any agency of government. There's nobody that is above the law, So with this enforced, I believe that to a great extent to quell all of those issues, and these are things that had been spanning over time, and I believe that that's one of the reasons why the Finance Act, the provisions were made in the Finance Act to address some of these, issues or squabbles.
Okay, so basically, it seemed like because people have been, going against that practice over a long time, it's not something that just because it has now been introduced in the law, people would stop doing it. But we believe that with the introduction, it would gradually reduce how people interfere with, the laws that FRS are supposed to administer, right?
Yeah, sure. Absolutely.
Okay, great. So, so I'll go to the next question around, so for government agencies, like this one is a big elephant in the room for the banks, the RAMFAC, who have sought to audit companies, especially banks, for various taxes in the past. What's the implication of this amendment? And, such companies, should they still open their books when RAMFAC comes, for audits?
Okay, so thanks. Yeah. So the Finance Act again, okay, since it has now, FRS is now the sole regulatory body, okay, responsible for administering FGN taxes, and also take note, auditing companies as well. It would mean that any other agency, RAMFAC, and any other one in that category, that because I'm also aware that in the past they conducted audits, of taxes, which FRS has legislation, over. So all these audits will no longer be permitted. That is the basis. Okay, so even though there had been clashes between those certain government agencies, from time to time about auditing companies, I think this provision has actually, quelled it. Now, there has been series of complaints, okay, about even the activities of RAMFAC, that they are not in tandem, with the acts that established it. So this is strictly zeroing in on RAMFAC. They said because it has been causing series of issues in the system, because organizations have been audited for the same period that FRS had previously, audited. So such repeated audits have been a major cause of concern, for these companies, and mostly banks are the most affected, and we know that you can imagine multiplicity of taxes leading to, waste of time, efforts, and even leading to double tax at the end of the day, because you're paying the taxes like twice. So I think, like I had said earlier, one of the things that necessitated this amendment by Finance Act was to make the roles of FRS explicitly clear, through the Finance Act, where it concerns auditing or assessment or accounting of taxes. So the FRS, as I know, is the only agency saddled with that responsibility if it's for federal taxes. And then, yeah, so I would also say let's also be mindful that the Act has also made provisions for FRS to collaborate with other federal government agencies or bodies for the purpose of enforcing compliance with tax collection in Nigeria. I mean, we should be mindful of that, you know, because what that suggests is that some agencies may conduct tax audits, but it has to be with the collaboration of FRS. Okay, so the question now is, will FRS want to collaborate with RAMFAC? I don't think so, obviously, you know, because I mean, this squabble seems to, I mean, this is one of the reasons why the Finance Act came up with that provision. But what is most important is that if there's going to be any of such audits by these agencies, then the FRS would be required to inform the companies of such collaboration, as we've seen in the ongoing stamp duties audit, you know, by the Office of the Attorney General, okay, of the Federation. So if the banks or the companies have to open their books, FRS has to let them know that they are collaborating with them. Or otherwise, it shouldn't happen.
Okay, great. But, you know, something you said that I think I then need to ask a question. I don't know if you are aware that RAMFAC has gone to court to challenge FIRS on this, you know, new amendments, you know, asking the court to interpret that provision vis-a-vis RAMFAC's power. You know, what do you think? I don't know if you've heard about that case. And if you have, what do you think is the implication of the case and the expected outcome?
Okay, I can talk about the implication of the case, but the expected outcome is for, I would say, heavenly beings to predict. I'm just a mere mortal, so I'm quite limited in that area. Okay, but then actually RAMFAC, okay, yes, went to has gone to the Federal High Court, okay, to seek interpretation of the amendment that was made by the Finance Act 2021. So obviously it didn't go well with them. So they filed a lawsuit, you know, against the Attorney General of the Federation, the Minister of Finance, and the FRS all together. They filed a lawsuit against all of them. And this recent action by RAMFAC really is not unexpected, you know, because RAMFAC has kind of, you know, had this air of all almighty, you know, because they feel that their powers were conferred on them by the Nigerian Constitution. And they said that the Constitution gave them the mandate to monitor revenue accrual into the Federation accounts, and also for disbursement of revenue from the Federation account to the 3 tiers of government. So they claim that they have autonomy, and their autonomy is sacrosanct, and that the Finance Act doesn't even possess the powers, you know, to either stop its operation or even monitor its activities, because they are all enshrined in the Constitution. So that is RAMFAC's view. Okay, so I do wonder, you know, at times that whether, because if you hear their mandate, monitoring revenue, you know, due to federal government will now include auditing, you know, because, but, well, that's the way RAMFAC has viewed it. So the case is in court, but the Finance Act 2021 had made FRS the agency of the government solely responsible for the assessment and the enforcement of taxes and levies due to the federal government. So my expectation really is that the Federal High Courts will hopefully interpret and explain the FRS powers to create like a level playing field, you know, for all affected agencies, especially RAMFAC. And also they would help to provide a better understanding of the powers of these agencies. That's my belief of what the court would actually, you know, eventually rule over or rule on. And the case has been adjourned, okay, to 10th of March 2022, that's this year. So I guess we'll all have to wait to see what the court eventually decides.
Okay. So does that mean that FIRS will not exercise its powers until the, you know, the court's case is ruled on?
Well, the Finance Act had stated that the provisions of the FRS Establishment Act will take precedence over any other laws regarding general enforcement of taxes and levies due to the federal government, except where there is a litigation. So except where there is a court case. So given that the case was recently taken to court, I mean, it just happened recently and is yet to be decided, one can say that it cannot be enforced yet until the case is heard and the jury is out.
Okay. So in essence, what is the summary of all these that you are saying to an agency that is unauthorized in administering FGN taxes? What's basically is the implication for them if they still go ahead?
Exactly, thank you for that. So the implication is clearly stated in the same amendment in the Act. It says that it provides that taxes due to the federal government, that is to be collected by the FRS. If there's any other agency that tries to collect it, the FRS, it will impose a penalty for non-compliance, okay, of 10 million naira and imprisonment for a maximum of 5 years. Yes, so that is what other agencies have to bear in mind, because that's now the punitive measure that has been given to anyone that defaults and doesn't refer any case to FRS or tries to audit, the taxes that FRS has jurisdiction over. So they will be sanctioned with that fine.
Okay. So I'll ask you a few unrelated questions, but are questions that are of interest to people in the chat room. They've said that regarding the provisions of withholding tax in the Act, what can FIRS do to reduce the burden of withholding tax unutilized by companies and it continue to grow every year? So I think this question is talking basically on unutilized withholding tax credit notes vis-a-vis, I think, Tax Pro Max. So is there any response you have for this person?
Okay, so I would say that, most of when Tax Pro Max, came up, that there's supposed to be a reconciliation of withholding tax credits, okay, that has to be done for the past years. I know of instances where a number of, people are still trying to do the reconciliation, but I think it's something that, the taxpayer has to push through to ensure that all the unutilized withholding taxes are actually recognized, eventually, and that the reconciliation is done, and then they can get credit for those taxes that have been unutilized. Okay.
So another person has asked that, so what is the role of FIRS in the establishment of FCT IRS? The PAYE tax for Abuja residents has always been remitted to FIRS until sometime in 2021. So this person, I think, is a bit confused as to what FIRS, has to do with FCT IRS. Just if you can provide a little bit of clarity.
When you say FCT IRS, I want to believe that they are talking about taxes, by residents in the FCT zone.
Yeah.
Okay,
for me, my understanding is basically FIRS is also the FIRS is responsible for FCT IRS. It's just that FCT IRS is solely focused on acting like the state tax authority for Abuja. So, but it's still under FIRS. So I'm responding to that question, unless maybe you want to add another thing to it.
No, that's correct, because again, it's still under the purview of FRS, really, at the end of the day.
Okay, there's a question around, incorporated trustees and charity organizations, but I think we'll leave it at a later part, since that is not the direct topic we are discussing, but we would try to address it later on. But please, if for any reason we do not address your question, or you think we haven't addressed your questions properly, please reach out to us. We will be happy to respond to you privately after this session. So, Chika, let me then ask a question that I think may be slightly different, but also in line with what we are, talking about. That we are aware that the Finance Act 2021 amended Stamp Duties Act by giving Ministry of Finance the powers to make regulations for the administration, collection, auditing of stamp duties and EMC levy collected between 2015 and 2019, within 30 days of the act becoming effective. So this provision has been challenged, in the courts by Anambra State Board of Internal Revenue. What do you think, this court case means for Ministry of Finance's power under Finance Act 2021 regarding stamp duties?
Okay, so thanks. The lawsuit is actually a clear evidence, okay, that there is contention between the states and the federal government, which has not yet been settled. Okay, and the crux of the matter is that the Stamp Duty Act gives states authorization, okay, to collect stamp duties when the transaction is between individuals. However, there are instances where a bank is involved in that transaction as a necessary platform, okay, to conclude such a transfer. Also, the Act, that's the Stamp Duties Act, has also authorized FRS to collect stamp duties whenever the transaction involves a company. So where you have transfer of monies between individuals, that's individual bank accounts, because again, this has to be done through a bank. Presently, the banks have been remitting the stamp duties on those transfers to the FIRS, okay, because as a company, they are involved in that transaction, before it can be said to be completed. However, the states are claiming that the money is theirs and should have been remitted to them, because in their view, the real parties to the transactions are individuals, and that the bank is just a platform used to transfer such monies. So the banks, in their view, they are not involved in that transaction. So that's actually the dispute, between the states and the FRS. Okay, so now, based on the amendment of the Finance Act, the Minister of Finance now has enlarged powers to regulate the administration, the collection, and the auditing of stamp duties collected between 2015 and 2019, okay, within 30 days that the Act had become effective. Also, she would also provide regulations to the EMT levy, that's the Electronic Money Transfer Levy, which is now the new name for stamp duties on electronic transfers. So it therefore means that when this regulation is eventually released by the minister, the state will be bound by its contents. So if the regulation by the minister ends up saying that FRS to collect the taxes for those back years and on a going forward basis, then the states will have no claim, to the money anymore and would have to hands off. So it is all obvious, really, that this provision in the amended Act didn't go well with the states. So Anambra State now went ahead to sue the Attorney General of the Federation and the Minister of Finance over this amendment, saying that it's in conflict with the provisions of the Stamp Duties Act and it's inconsistent with the Constitution. So it should be null and void or of no effect. Now, the case is yet to be heard, okay? However, we expect that more clarity will be provided as the case progresses. There's also even another case which is similar to this case you just mentioned. And that case is presently at the Supreme Court. And the case is between the state attorney generals of the 36 states and the Attorney General of the Federation. So the case was filed last year. It's yet to be heard. So let's also note that, meanwhile, the Minister of Finance is yet to release the regulation, even though it's past 30 days timeline that was specified in the Act. So my guess is as good as yours. Probably they may want to wait till the case or the cases have been heard in courts before proceeding with it. Yeah.
Okay. So what does this mean for the banks? Should they halt deduction of levy on applicable transfers until this case is resolved?
So because the regulation has not yet been given and the cases are yet to be heard, I would say that the mere fact that the powers of the minister has been challenged in courts doesn't remove the applicability of the levy on electronic transfers, which has been properly provided for, in the Finance Act. So, and I'm also aware that there's no court injunction that has kind of halted the collection of this levy. So applicable transfers will remain liable to the EMTL levy in line with the Finance Act 2020. And banks should continue to deduct as applicable. Yeah, because presently they're deducting, they're remitting to the FRS, account in CBN.
Okay, great. So it seems like the way our tax environment is now, there's a whole lot of states challenging the federal on taxes that previously the states haven't been quite active on. And in the same way, now that the Finance Act says that all government agencies are now required to refer all tax investigations to the FRS, does this extend to tax investigations on individuals, or must states be, or should those ones be referred to the states?
Okay, so the Finance Act requires that, yes, all tax investigations be referred to FRS, but this amendment does not extend to states. As we know, as most of us may know, the administration of taxes paid by individuals, non-corporate businesses is still under the jurisdiction, of the State Board of Internal Revenue and not the FRS. The only time the FRS comes in is when maybe individuals are employed in maybe Nigerian Army, the Navy Force, or Foreign Service. So that's when FRS comes in. So it cannot, so to answer your question, it does not extend to, tax investigations on individuals. That is solely for the states. Apart from the exception I mentioned, yeah.
Okay, so, but do you think that FRS has the capacity to manage, all the cases being referred to them now?
Okay, actually, if I look at it, the scope really has not necessarily changed. FRS is still manning the taxes it has always been manning, which is all those taxes under the approved list of collection that I mentioned earlier. So if all the cases are referred to them, I would want to believe is maybe all the cases that maybe RAMFAC would have said, oh, there's this person that, or maybe some other agencies would have mentioned, that maybe this company is not paying the right taxes and all of that. So nothing really has, will I say, significant has changed. So yes, they can handle all the tax investigations. That's what they have been doing anyways. until other agencies now, came up and started trying to do what they are doing as well.
Okay, thank you about that. Yes, just to correct something I said earlier. Yeah, I think I may have said it wrongly. FCTIRS is a separate body. Yes, in the past, FIRS used to manage both, but I know that there was disputes. I think FCTIRS was set up under a separate act to manage taxes relating to residents of Abuja. Yes, you are correct. I think that was Vivian that highlighted it. Yes, Vivian, you are correct. So, Chika, we would move to, to talk about something, a bit off this again. I know that, in recent times, FIRS, once the Finance Act comes out, FIRS will dish out circulars providing clarifications, about some of the ambiguous provisions. So, where there are inconsistencies between the law and FIRS's circular, especially in line with the powers that have now also been given to the FIRS, which one should we follow? Is it what is in the Act or what the FIRS have stated in their circular?
Okay, so the FIRS circulars are issued to provide clarification, on the tax laws, and they are not a force of law themselves. So the FIRS can only explain what is in the law, but not rewrite the tax laws to suit their position. So I would say the FIRS cannot introduce anything that is not stated in the law. So in case where there are inconsistencies, between the circular and the law will always prevail. Yeah. And then let me just add that, we're still awaiting the issuance of the FIRS circular, to provide clarifications and further expatiate the provisions that have been stated in Finance Act 2021. So hopefully that will be released soon.
Okay. So, with these new powers, again, I would ask, is there an impact on revenues shared between federal and states, the federal government and states on, income coming from stamp duties? I know you've tried to explain the issues around stamp duties and EMT. Is there a revenue impact on revenue shared between federal government and the states, such as stamp duties and VAT, and does it have any implication on ongoing VAT debate between federal government and the states as well?
Okay, so in terms of revenue sharing, by design, really, revenues by design, revenues meant to be shared between the federal government and the states are remitted into the federation accounts, and that's before they are subsequently allocated to the states. And this is based on the derivation principle. So the new powers doesn't affect the sharing, of revenues between both federal and states. So it's all based on derivation principle. But to answer the latter part of your question, which is the implication on the ongoing VAT debate in terms of the new powers of FIRS, whether it has any implication on it. We are aware that states have challenged, so just to give a background, that states have challenged the FIRS authority to collect VAT in Nigeria. So there's the present ongoing VAT debate, between the states and the federal government as to who is the appropriate taxing authority to collect the tax. So this issue is a fundamental issue, and as to whether VAT should be collected by the FIRS or the states. And the main issue there is, the main issue of contention really is whether to centralize the VAT regime and allow the tax to be centrally collected by the federal level, that's by the FIRS at the federal level, which is presently what is being done now, or to decentralize it and let the states start collecting the VAT. Now, the states are trying to get it to be decentralized, but now the case is actually at the Supreme Court. It's yet to be decided. But based on the ongoing VAT debate, I just want to say that, decentralizing VAT may have a far more reaching, will I say, consequence, both because of the nature of the tax and in terms of complexity, and also for the taxpayer. But we should note that the Court of Appeal, when the case was referred to the Court of Appeal ruled that all parties should maintain status quo. But then Rivers State now further appealed, went to the Supreme Court. So I guess we'll all have to wait till the jury is out to know the final decision, what is going to be. So I would say that the Finance Act, even though it stated that FRS takes precedence over, that's the Establishment Act rather, has precedence over any other law, but it says that the exception is where there is a court case, where there's a litigation in court. So we can actually What I don't.
Learn on the go and stay informed. Our goal is to keep the average user informed and up to date with relevant tax information. For the entrepreneur and investor, getting acquainted with tax laws and regulations could be quite daunting. Well, not anymore. Introducing the KPMG Tax mobile app, where you can access all tax-related news, laws, and insights in one place. Also, calculating personal income taxes has never been quicker. To get the app, simply search for KPMG Nigeria Tax on Google Play Store or iOS Store and install. Once installed, quickly do a one-time sign-up on the application to access a constantly updated library of news, laws, and articles alongside easy-to-use tools. The KPMG Tax mobile app has a minimalist design, making it effortless to use and navigate. What's more, if you can't find what you need, asking a professional is as fast as it gets. Let's walk you through the application. The full menu is accessible from the left and helps you jump to any part of the application in seconds. Access fresh tax news by clicking on the news icon. The seamless scroll makes it simple to view all news at a glance. You have news you've already seen and want to go back to? Just search. Expand or share each news item to your friends with the dedicated buttons. Adjust your news preference easily from the settings icon and tailor your content. We have embedded tax legislation and popular cases in our tax laws section. Are you eager to know more about taxation in Nigeria? KPMG Tax app has more than enough for you. Stay on the cutting edge of industry updates with insights features. The new app brings together alerts, newsletters, articles and publications from industry-leading KPMG professionals. You don't have to worry about missing important regulatory dates and other notable events. The notable date feature brings them all into
Okay. So can you, okay, Chika. Okay, we're all welcome back to this short break. And for some reasons, our network went off. I hope our participants, we crave your indulgence for this. This is one of the issues we have to face with technology. So please, you're welcome to this second phase. Before we go back to the questions, please, we'll just like to run a short poll again, just to have an idea of your feel towards the next segment of questions that we'll be addressing. So please, once again, join us in the polling session while we get your views. It's going to be short, so please just join us immediately. So you can either join by scanning the barcode you are seeing, or you click on the link that you are also seeing there. The link will be posted in the chat. Okay, So let's just go straight to the questions. Can we go straight to the questions? Okay, so do you think the appointment of some non-resident businesses as VAT collecting agents can be effectively administered by the FIRS? What's your view? It's divided. Okay, now more people are saying they don't think FIRS can manage it or administer it effectively. Okay, I can understand where guests are coming from on this question. So let's look at the next question. So do you think a person appointed by FIRS as an agent should be held responsible for tax payable by another taxable person? Okay. Okay. So about 80% of our guests are thinking that, agents shouldn't be held responsible for the tax payable by another person. Okay, fair enough. Let's look at the last question in this segment. Okay, so what effect do you think this move to tax non-resident digital e-commerce on a fair and reasonable basis will have on the Nigerian economy? You think it will be positive? You think it will be negative? And you think it will be neutral? Okay, so about 76% of our guests are thinking that it should have a positive impact on the economy.
Possibly more people want to see the non-resident companies taxed. They believe to bring in more money.
Yeah, sure. Okay. Okay, so I think that should lead us into our, the other segments of this discussion. That should, give us a smooth entry into the next segment. So thank you for projecting the polling questions. Yeah. So Chika, I think the polling sessions, the polling questions have actually, sort of given us a feel of what the guests are thinking. And I would start by asking you, if FIRS appoints my organization as an agent, what would be the responsibilities that FIRS should expect from such organization?
Okay, so thanks, Sake, for that. Now, typically, a person making a taxable supply, okay, is meant to account for the VAT. Okay, however, where a person is appointed as an agent, okay, to the federal, to the FIRS, whether or not he's the supplier, he's expected to withhold or collect the tax due on that taxable supply. So, and that appointed person is also expected to remit the tax, within, on or before 21st day of the following month. Now, the FRS may appoint a company to collect VAT, or I would say appoint a non-resident company, okay, in terms of appointing an agent. It may appoint a non-resident company to collect VAT and remit the same to them, where the supply is made through electronic or digital means. Now, if it is the non-resident company that makes the supply and has been appointed as the agent to the FRS, okay, based on the, I would say, current guidelines, it will be required to register for VAT in Nigeria and file the returns and issue VAT on its invoices. It should also be required to keep adequate records, in case the FRS may want to verify in the event of an audit, and so these are the essential things, whenever the FRS appoints an organization as an agent, and most of the organizations they would appoint as an agent will be in terms of a non-resident company. Now, I would want to move over to, just to expatiate a bit further, that the FRS, to appoint a non-resident as an agent, there's a threshold of making taxable supplies of about $25,000 or more in 12 consecutive months before or after the issuance of the guidelines. Okay, so this guideline will take effect or has taken effect from 1st of January 2022 when it comes to the supply of services and intangibles, but it's going to take effect for goods when it comes to the supply of goods in January 2024. So the FRS empowers the non-resident company to appoint, a representative. So this is the flip side. So if as a non-resident company, you are appointed as an agent, there is also a latitude for the non-resident company to appoint a representative for the purpose of its tax obligation in Nigeria. Okay, but then the representative will have to act on behalf of the non-resident company in terms of, when it's registering for taxes. Like I said, there are certain things that you have to do once you're appointed as an agent. You have to register for taxes and all of that. But if you are a representative of, an agent that was appointed by the FRS, then you would have to, I would say, register for taxes, not in your own name, but in the name of the principal. Okay, and then all correspondences with the FRS on behalf of the principal shall be in the name and in the TIN number, tax identification number of the non-resident company. Yeah, so I would say finally, the non-resident company is also required to inform that the FRS immediately it's terminated, its appointment as a representative to an agent has been terminated. Yeah.
Okay, great. So so you are saying that from what you have said, will FRS hold the organization responsible for failure to withhold VAT where necessary?
Yeah, generally, let me start off with this. Generally, a recipient of taxable supply, okay, is expected to withhold VAT if the supply is made by a non-resident company. But based on the Finance Act, okay, this obligation will not crystallize if the non-resident supplier has been appointed as an agent to the FRS. But then, if the non-resident company, that's the agent, fails to collect the taxes, then the onus will be on, that's if the non-resident company does not include VAT in its invoice and all of that, then the recipient of the taxable supply would now be meant to pay over the VAT.
Okay, great. So I know that in the past, FIRS had, should I say, resorted to freezing taxpayers' bank accounts by, instructing the banks, as who had been at that time appointed as agents, to freeze those accounts. Is it something you think they're able to carry out currently based on the powers that have been given to them in the Finance Act 2021?
Okay. All right, so thanks for that, Ike. So the FRS's power, to recover tax payable from an appointed agent, you see that in the one of the sections of the FRS Establishment Act, but this section was not amended by the Finance Act 2021. Therefore, the FRS may instruct banks, as agents of taxpayers to freeze taxpayers' bank accounts in an effort to recover unpaid taxes. However, it was established by courts of law, that FRS really doesn't have the power to unilaterally, freeze the account of the perceived tax defaulter without the due process of obtaining, an order in court to do so. So the court ruled then that based on the provisions of the FRS Establishment Act, the funds sought to be frozen must have been declared as maybe proceeds of tax fraud or evasion. So given that, fraud and tax evasion, they are criminal in nature, the FRS can only freeze bank accounts after the taxpayer who holds such accounts has been found guilty of tax fraud or evasion, by maybe a competent court of jurisdiction. So furthermore, the confiscation of the funds or freezing of accounts must follow the due process. So you have to obtain a valid court order, and I think at the very least, the FRS must prove that that liability is actually final and conclusive, and that is when the bank can actually go ahead to freeze the account. So what I'll say is that banks should ensure, that adequate inquiries are made to ascertain that the taxpayer has been convicted of tax fraud or evasion, or by a competent court, or maybe a valid court order is obtained before carrying out any directive from FRS, or any other authority to freeze the customer's account, on account of tax recovery.
Okay, that's very insightful, because ordinarily I would have thought FRS should be able to, rely on the powers they have to continue to freeze accounts. So thanks for that insight. So I'll go back to, question around, the non-resident companies again. I know that SITA now allows FRS to access digital or digital non-resident companies on a fair and reasonable basis, right? So where it's not satisfied that the returns filed by the non-resident company is adequate. So is there any clarity on what constitutes a fair and reasonable basis?
Currently, there is no express definition of what constitutes a fair and reasonable basis based on the law, on the laws. It appears that it has been left to the discretion of the FRS. However, historically, FRS had adopted an approach of where a fair and reasonable basis may mean the 20% of the company's income being assessed to company income tax at 30%. So it's bringing the effective tax rate to 6%. And that's what we typically used to know then that that is called the 6% deemed income basis. So the FRS may attempt to adopt a similar tax rate for non-resident companies going forward, but that is not certain. Even though I know the minister had come up to say something like that, but it is not certain. But that is what historically used to be. Yeah.
Okay. Again, I will also go back to some of the things you've talked about in the past. We see that taxpayers are a little bit more bold to challenge the norm that we used to have in the past. And I know that there have been a whole lot of cases that have been passed to the court. So I know Finance Act 2021 includes a clause that, the minister may, subject to the approval to the National Assembly, make regulations to authorize an agency of government other than the FIRS for collection, administration of federal government levies and taxes. So given that the minister's power to make similar regulations have been challenged in the court on the basis of this, provision as unconstitutional in the past, are similar issues likely to come up based on this provision that has now been provided in the Finance Act 2021?
Okay. There's always the possibility, really, that various tax law provisions will be challenged in the court of law. It's quite consistent, really, with the democratic tradition for, but it's quite consistent. I mean, I think it's consistent with the democratic tradition, for legislation or legislature to confer administrative powers on executives for ease of their administration, just to ease administration. The challenge here is how to ensure that the executive can act legitimately, without usurping or assuming the power of the legislature. So the Finance Act 2021 provision, yes, it makes the regulation which may be issued. It has said that the regulation that may be issued by the Minister, of Finance will be subject to the National Assembly's approval. So I think that clause is very, very important, that it's going to be subject to the National Assembly's approval. Therefore, to the extent that such regulation, when it is issued, does not amend any of the specific provisions of the Finance Act, but seeks to advance its purpose, for ease of administration, it should be acceptable, even if challenged in courts. So we have a lot of, anybody can challenge anything, but as long as it doesn't amend, the provisions of the Finance Act, then I think there shouldn't be any fear that it will be acceptable in court. From even previous court rulings, only the amendment made to an act, or would I say the schedule of the act, has been pronounced unconstitutional by the courts. So in that case, the minister, in that particular case that I am referring to, the minister amended the schedule to the act, and the court ruled that the power to amend lies with the legislative arm of government and not with the executive arm, of which the minister is part of. So ultimately, I would think that as long as the Finance Act has already said that the regulation to be issued by the minister will be subject to National Assembly's approval, so to that extent, it should be acceptable.
Okay, great. So I would then go into a segment where, some of the things that our guests, have noted as it is not something they appreciate as part of the changes, but, it's something that I would say is our current reality. And for me personally, it's a big elephant in the room. So, with the powers to deploy third-party technology on taxpayers' systems, there are concerns that FIRS, we have access to confidential and sensitive information of companies and, of customers of such companies, which, at the end of the day, they may violate extant data privacy laws and expose companies to, litigation. Do you think, or are there protective measures for taxpayers in this regard? This is something that, the participants have already said they are not very comfortable with. So I would also like you to, say what you think on how they can address this, if any way. Yeah.
Okay, these are actually valid concerns. Anything that has to do with data privacy breach and all of that, I mean, they are valid. But I would also want to note that the Finance Act attempted, to allay or calm these concerns by amending the provisions of the FRS Establishment Act to mandate every person who is in an official duty or who is employed for the administration of the Act and has access to taxpayers' information to deal with such information as confidential. Okay, the Finance Act 2020 also stated that anyone, including an employee of FRS, whether it was a current employment or a previous employment, or even an agent of FRS that communicates taxpayers' information to any person, that any unauthorized person, that is supposed to be collecting the taxes, or even misuses taxpayers' information, will be guilty of a fine of 1 million naira or 3 years imprisonment, or both. But then these measures serve as a deterrent, really, to tax officials, making them conscious of the need, really, to keep the information confidential. Quite confidential. However, I wouldn't say that these are strong protective measures, for taxpayers. But I would advise that maybe taxpayers work in industry groups, more, in order to kind of protect themselves. And if you look at the flip side, there's also the data privacy laws, which provides recourse to an agreed party or a party in the event of a violation. So there's always a kind of a due process. When there's a breach, you can take recourse, to the law. I also understand that there's a new agency called the Nigerian Data Protection Bureau that was recently set up to enforce the NDPR, that's the Nigerian Data Privacy Law. But another thing to note, so in essence, talking about whether they have concerns, whether the protective measures are strong, based on the Finance Act alone, I don't really see them as really strong. But it's also important to note, for the taxpayer, that if a taxpayer refuses to allow FRS connect into their system, it will attract a penalty. And that penalty is 25,000 naira for each day the taxpayer fails to grant access to the FRS. So if you calculate it in a month, if you still fail to grant them access, you end up paying like 750,000 a month, and continue as as the default continues. So the law, it's clear the law has given FRS the power to deploy technology. But I would expect that FRS should use the right connection tools and also the right kind of approach. And also, I think they should also be able to adopt strict risk management processes and procedures in a bid to protect the companies and their clients. And I'll say finally, my advice to taxpayers is that it is most important, now that we know that FRS has the power to deploy their technology to your system, it's most important to proactively review your system to ensure that it's properly configured to deduct taxes, so that you can fix any lapses, before the FRS before the FRS comes. You know, and that's what you know, we in KPMG we actively do for our clients to be better prepared, and so that you're not taken by surprise, you know, when they eventually come. And we know how FRS is, because when they do come, you're definitely going to be seeing huge exposures, you know, but by then you won't be caught off guard, because you would have tried to close the gap and the leakages. So I'll just say, I want to end with that, that's actually the advice to taxpayers now, that they should proactively review their systems to ensure it's properly configured to deduct taxes.
Okay, yeah, insightful. So, yeah, but I know that FRS, that provision also gives FRS power to grant extension for a period of 30 days, even though there's a condition for them to grant it. You know, I think the condition is around, you know, them thinking that the taxpayer is able to show good cause. You know, but the law didn't define what good cause is in that instance. So I don't know if you have any views as to what is good cause, and how, as a taxpayer, how should I be able to show good cause?
Okay, so what that section actually said is that the FRS can withdraw the notice to come, you know, or even extend, either to withdraw. Okay, so they won't come to deploy their system, their API into your system, or they can extend the time when they would come. And like you rightly said, you would have to demonstrate. For them to do that, you would have to be able to demonstrate good cause. So like you rightly said, okay, really, demonstrating good cause, it's not clear. It wasn't defined. It wasn't explicitly stated or, you know, in the law, you know. So the FRS, but I would believe that the FRS is yet to, at least since they are yet to issue their guidelines, since they are yet to issue their circulars, maybe they would be able to properly expatiate at that time. But if you ask me personally, I would say that if I look at it critically, demonstrating good cause, what can it mean? It can mean different things to different people. You know, it could mean probably paying the undisputed liability. That is, I mean, for FRS, I think that is to them something that is like you're really demonstrating good cause. You know, paying undisputed liability. It could also mean paying the tax liability not significantly, that is not significantly different from what has been assessed. Demonstrating good cause could even mean providing, you know, significant information, you know, for them to use. But ultimately, I want to believe that it will be properly defined, you know, when the FRS circular is out. But right now, there is no explicit clarity on what that means.
I know you didn't say this, but is it possible that if they write to me as an organization, you know, if I challenge them, you know, I object to them coming without doing any of these things that you have said, can it be interpreted, you know, to the other extreme, you know, that I haven't shown any good cause, or in fact, I've even withdrawn from any goodwill I have with them?
I think that one is outright confrontational, because the law gives them the power to do so, and then you're now objecting, you know. So I would wonder, I mean, they would be like, what are you objecting to? You know, I have all the powers to do this. I mean, it's been granted to me, you know, in the Finance Act. So really, that cannot be demonstrating good cause. In fact, that is bad cause, in my view.
Okay. So let me take a question from one of the participants on this, and then we can continue talking. So the person says, taxes, I believe, are applicable to income of companies not the operations and technology applied. If FIRS is interested in business technology, it should set up its own companies. If FIRS wants to see the full accounting package of companies, the law should make provision for the staff of FIRS to use the company's computer to access the package and go back. So basically, I think what this person is saying is, he or she doesn't think that provision in the Establishment Act is sufficient for FIRS to, come into a taxpayer system and take up information that they need to administer taxes. However, he or she thinks the law needs to be amended to actually even state it clearly what they need to be taking from a taxpayer system. What's your thoughts on this?
I hear her, but you see, the law has stated that the FIRS is allowed to gather information. Okay, all manner of information. In fact, even before this deployment of technology that has come up just recently, you should open your books to the FIRS and gather all manner of information. So I think that maybe because FIRS thinks that they are limited, in terms of most companies may not be providing them with complete information, okay, or full information. So that's why they had to put that provision in the act to say that they can actually deploy their technology and it will be for the purpose of gathering information and also for tax assessment. So I believe that even though she has said, why don't you use the company's system to do that? I think the FIRS would prefer one would rather trust their own system than another person's system, and then in terms of compatibility, to ensure that they reach out to as many people as possible. I think that is why they are trying to also use their own customized system in doing or trying to gather all of this information. So they have their reasons. If you think that the law is really not strong enough, I don't think there's anything stronger than something being stated in the Finance Act, especially since it's an act that has passed through the National Assembly and all the processes have been meted out. So I think it's really, it's something that people should be aware that it's real. It's going to be, if FIRS wants to use that portion of the law to enforce collection of taxes, they can't be refuted.
Okay, thank you for that insight, Chika. So would taxpayers have to reconfigure their system to fit, this FIRS's automated way of administering tax?
Okay. Now, FIRS administration of tax has been automated and can be used via technology. So what would happen is that the FIRS would give an IT requirement to the bank's IT system, okay, to enable their application program interface, which is the API, to interface with the bank's own API. And this is largely because, APIs are their software intermediaries that allows two interfaces, to relate and exchange information. So I think that's the smoothest way they would go about doing this. And we should all know that when the application software, when they are interfacing, once the program is running, FIRS, what is happening is that FIRS is taking all the information it needs, and the bank is, of course, not aware of the extent of information being exchanged. They are not even aware of the type of information being exchanged. It can take all the information it wants. So what the taxpayer should do really is to see that this is this can create huge risk for them. I mean, tax risk for them. So what they need to do is to conduct a proper check, of the effectiveness of their system to cater for, taxes. They need to, you need to ensure that your system is properly configured to deduct taxes, so that it's not when the FRS comes that one will begin to notice all the lapses and the gaps, in the company's system's tax configuration.
Okay. Yeah, I thank you for that, by the way. When you were talking, you kept mentioning banks. I wanted to know if it's, just going to be focused on banks, or it's something meant for everybody. Yeah.
Yeah, it's not just banks. The law didn't say it's only bank. No, it's just that I know there's retail, and then banks also, they are already trying to do that. So I believe it's going to cut across all sectors of the economy. But for now, I think they are particular right now on banks and then retail.
Okay. Thank you for that. So, in you talked about API that is going to be set up. So probably FRS may not have to deploy a software directly into the system of anyone. So I'm wondering, is there not going to be a cost to all these, having somebody, bringing something to your system, whether it's going to interface with an API? Is there not going to be a cost, and who would bear that cost?
Okay, so yeah, in terms of cost to the company, okay, in a sense, there won't be any direct costs, so there won't be any need to make your system compatible with FRS system, so it's not going to be like a direct cost. Rather, it will be, I would say, indirect, an indirect cost, because the company and the cost could be that your IT team, okay, would have to write an application program, to the requirement of FRS needs. That's the cost, because it's indirect. You're using your manpower or your resources. It could also be having to call a third party, okay, like a firm, your tax consultant, or a tax firm, to test check, your systems, in order to ensure that your systems are properly configured to charge the right amount of taxes. So, I mean, it's an additional cost, but it's indirect the way. So I don't see any direct costs per se.
Okay. I see your point, but I would even there add that it's even though there's a cost, but in my view, it will be a cost well spent if it's going to help me avoid FRS, seeing things in my system that I wouldn't have had an idea of, before they deployed their interface with my organization. So I think it would then be a cost well spent. But that said, is there a limit, or controls around the type of data that FRS can access from the company's ERP or core system, using this approach? And is the FRS allowed to obtain, transactions and other financial information, that may not necessarily relate to what the taxpayer thinks, would lead them to generating a tax liability?
Okay, there's no limit to the type of data that FRS can gather. It can gather all manner of data. And, the major objective is actually to help FRS gather enough information that will be used to subject you to tax. So there is no limit. Even the Finance Act states that, yes, FRS can deploy its proprietary, its technology to automate the tax processes. And what it says is including tax assessment and information gathering. So information gathering is very loose, it could be anything. So the Act does not define the scope, of information the FRS may obtain through its technology. So whether the information has to do with resident or non-resident suppliers, you can just be rest assured that all your information will be exposed and open, to the taxpayers' reach. So I guess that's it, and I know that we're expecting the circular to also provide us, that's the FRS circular, to also provide us with, I would say, more guidance and clarification as we go on. Yeah.
Okay, thank you. I see there are no much more questions in the chat, but please, if you have any other questions, please ask. I know someone had asked a question about royalties, but I hadn't taken that because it seemed to be outside what we are talking about here, but we can talk about it. We'll respond to you. I don't see any other questions, but Chika, what's following all you have said, what should be, the key takeaways for, our guests in this tax chat? What should be the key takeaways? You've said a lot of things, which I think are quite insightful, but what would you say would be the key takeaways for our guests?
Okay, I think for me, the era of double, frequent tax auditing, of paying the same taxes is, wrapping up or has wrapped up, For in terms of participants, the major thing now is to know that the FRS is the primary agency, is the sole agency. They can come in to audit your books, at any time, but that RAMFAC is now, all those other agencies, are not supposed to come to audit your books, except if the FRS, has collaborated or has informed the taxpayer that it's collaborating with them. So that's one of the major things to note. So please, if such agencies come in to audit, the most important thing I think is for the taxpayer to quickly refer them or talk to the FRS and about it. And I believe that the FRS will definitely intervene, especially now that it has been empowered, by the Finance Act. I think another key takeaway is that now that the proprietary tools is a reality, it has come to stay. So that means that, the proprietary tools of FRS being deployed into the taxpayers' system is something that will expose a lot of companies to significant taxes, because now the FRS, in the past, the traditional way of auditing, when they come to audit, they will come up with very huge liabilities. Now that they are open, they have access to all kinds of information. There will be series and series of back and forth trying to explain things, because these are things that typically happen during tax audits. So the fact that the proprietary tree is going to be deployed and then they will have access to all the information, the big message is to ensure that your systems are actually configured to deduct the right amount of taxes. Ensure that there are no gaps, there are no leakages, so that even if they come, and no matter what angle they look at, you won't be taken unawares, and you'll be better prepared for it. Yeah. And then also for non-resident companies, or once you're appointed an agent of the government, whether you're a non-resident company, you know that you would technically have to fulfill all the VAT obligations, the compliance requirements, ensure that you're registered for taxes, and that you put VAT on your invoice as a non-resident company. And there are so many other things there that one should also, be aware of in terms of as a non-resident company. So I think those are the major takeaways. And well, maybe I'll just state that the most important thing, the objective about when you're talking about taxation is fairness and equity. One needs to really pay the right amount of tax, and that's what FRS is trying to do, to ensure that certainty and then equity, you pay the right amount of taxes, whether as a resident company or whichever company, you pay the tax that is due. But I think fairness also comes to play, on the side of the tax authority, to ensure that whenever the way it goes about, administering its powers is, in a fair and level way. That's what I would say.
Okay, thank you very much, Chika. Paul Baba, your question is not very clear, so it's difficult for me to take. Okay, it seems like you've provided. So let me just read the second one. On the issue of taking off of Finance Act 2021, with the caveat that unless an issue is pending in a court of competent jurisdiction, how can the possible time delay be resolved to avoid unnecessary delay? I'm not sure that question is very clear, but I'm thinking your question is around how can the delay of the courts be resolved to avoid any consequences of what the provision that has been previously enacted. I don't know whether that's what your question is meant to be. So Chika, do you have any response in that regard?
Okay, I would think that, maybe he's referring to the fact that since the Finance Act has stated there that the provisions will not apply, okay, until until a litigation in court, that it's not going to apply as long as you have a litigation pending in court. And then there are delays, before court cases are heard. We've seen so many court cases, even the ones filed last year, they haven't even been heard up to now. So how do you marry, the two? I would say that really the cases, you still continue, things will still continue as it is, until a verdict is given, until a ruling is given. It will still be as the law has said, unless proven otherwise. So it is only when the court eventually, nothing stops, the provisions from being applied, even if it's pending in court. But once the court now rules, then obviously, whatever the decision by the jury is made, then one would have to abide by it.
Okay. Thank you very much, Chika. I think, Paul has responded that he's satisfied with your response. So thank you, Chika. Thank you, everyone, for joining us. I think we are gradually coming to the end of this session, and I believe we've addressed all the questions now, but if for any reason we haven't addressed your questions, we would respond to you. I think it's only one question around trustees, that which I didn't think related to this topic, so we would have to respond to you after this session. So thank you. This is a session we typically have every month, so there will be one coming up in March. For now, we can't talk about the topic. We don't know the topic. So, but be assured that it's going to be a topical matter that we will talk about. And we hope to see you then next month as well. So thank you to everyone. Chika, I don't know if you have any last words before we wrap up.
Well, I want to say, okay, it's been a kind of, an enlightening session, and really, for me, I'd want to say that the FRS powers, in matters of tax administration, in trying to, define the scope of FRS powers, in matters of tax administration, auditing, and enforcement of taxes is actually a step in the right direction. It will completely rule out all the ambiguities and all these controversies that have lingered over for a while. And then also, in order to have a better, better structured tax system, there needs to be some form of sanity, okay, that needs to be brought in by defining agents' roles and responsibilities to strike off any kind of ambiguity. I think it's a step in the right direction. I also hope that the various cases in courts, still awaiting hearing, that the judges, when they are giving their verdicts or their ruling, will try to create a level playing ground for all parties concerned, including the taxpayers. We know the canons of taxation, certainty, there's fairness, there should be equity. These are the fundamental principles that I would want the judge to actually use to guide their verdicts. And another interesting thing is that, it's been over 10 years, since the provisions of the FRS Establishment Act had been amended. Okay, so the amendment by the Finance Act is welcoming, especially at these times. I think it appears really that, all these court cases that are still pending, that the Constitution, we keep any court case that you hear about states and federal government or agencies, different agencies, they all keep referring to the Constitution. So it appears that maybe the Constitution didn't do justice in some areas, and there appears to be some lapses and all of that. So I just guess we'll all have to wait till the jury is out so that we know where we're headed to.
Okay, thank you very much, Chika. Now it's 11:58, so I'm sure our participants would have to go back to their work. So thank you again for joining us, and we will be happy to meet with you again come next month. So enjoy the rest of your day. Okay.
Thank you, everyone.
Yeah, thank
Bye.
you. Bye.
Learn on the go and stay informed. Our goal is to keep the average user informed and up to date with relevant tax information. For the entrepreneur and investor, getting acquainted with tax laws and regulations could be quite daunting. Well, not anymore. Introducing the KPMG Tax mobile app, where you can access all tax-related news, laws, and insights in one place. Also, calculating personal income taxes has never been quicker. To get the app, simply search for KPMG Nigeria Tax on Google Play Store or iOS Store and install. Once installed, quickly do a one-time sign-up on the application to access a constantly updated library of news, laws, and articles alongside easy-to-use tools. The KPMG Tax mobile app has a minimalist design, making it effortless to use and navigate. What's more, if you can't find what you need, asking a professional is as fast as it gets. Let's walk you through the application. The full menu is accessible from the left and helps you jump to any part of the application in seconds. Access fresh tax news by clicking on the news icon. The seamless scroll makes it simple to view all news at a glance. You have news you've already seen and want to go back to? Just search. Expand or share each news item to your friends with the dedicated buttons. Adjust your news preference easily from the settings icon and tailor your content. We have embedded tax legislation and popular cases in our tax laws section. Are you eager to know more about taxation in Nigeria? KPMG Tax app has more than enough for you. Stay on the cutting edge of industry updates with insights features. The new app brings together alerts, newsletters, articles and publications from industry-leading KPMG professionals. You don't have to worry about missing important regulatory dates and other notable events. The notable date feature brings them all into one place in a calendar or list, however you want to view them. For the average employee, entrepreneur or business person, KPMG Tax app has another important feature, the PIT calculator. Plug and play, simple as it gets. Input the required numbers and calculate your taxes. Also, the app has jokes and valuable tips. Check in to learn something new and fun. Still feel there's more to know? We've got your back. Ask an expert and get quick, insightful responses from KPMG professionals when in doubt. Learn more from various authorities through recommended links in the external links tab. Read all about us to find out more about KPMG's service offerings, our responsible tax principles, tax information. For the entrepreneur and investor, getting acquainted with tax laws and regulations could be quite daunting. Well, not anymore. Introducing the KPMG Tax mobile app, where you can access all tax-related news, laws, and insights in one place. Also, calculating personal income taxes has never been quicker. To get the app, simply search for KPMG Nigeria Tax on Google Play Store or iOS Store and install. Once installed, quickly do a one-time sign-up on the application to access a constantly updated library of news, laws, and articles alongside easy-to-use tools. The KPMG Tax mobile app has a minimalist design, making it effortless to use and navigate. What's more, if you can't find what you need, asking a professional is as fast as it gets. Let's walk you through the application. The full menu is accessible from the left and helps you jump to any part of the application in seconds. Access fresh tax news by clicking on the news icon. The seamless scroll makes it simple to view all news at a glance. You have news you've already seen and want to go back to? Just search. Expand or share each news item to your friends with the dedicated buttons. Adjust your news preference easily from the settings icon and tailor your content. We have embedded tax legislation and popular cases in our tax laws section. Are you eager to know more about taxation in Nigeria? KPMG professionals when in doubt. Learn more from various authorities through recommended links in the external links tab. Read all about us to find out more about KPMG's service offerings, our responsible tax principles, and disclaimer. It's now a breeze to connect with us online. Just click on the link icon on the home page to get to us on social media. KPMG Tax app, connecting with you on the go.